Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So no doubts that in the coming week the major driving factor will be the Tuesday report on the CPI index, because it might definitely made impact on the expectations of the investors concerning the next Fed step. Now it's widely expected it will be 75 basis points. Maybe CPI will not change the overall expectations on the market, but still, if it will be really significantly lower than market expect, it might change the investors' expectation and turn the balance in favor of the 0.5% move. But anyway, in general, we could say that we do not exclude that CPI might be a bit lower, as we have estimated in our Forex report. United States have burned big amount, really amazing amount of the national crude oil reserves. Now they stand just for 350 million barrels, and this is equals to the level of beginning of the 80s. And that have helped to control the gasoline prices in the country. This is first reason. Second reason is just investors are losing the wealth currently due to the inflation and in general difficulties, rising interest rates and so on. So demand also might be a bit lower. And finally, third moment is that high season of the vacation is currently coming to an end, and naturally demand for the gasoline is also dropping. All these factors should provide some contracting effect on CPI numbers, because you know the energy component of the CPI is relatively high, and with this drop, average CPI numbers should drift a bit lower. But we are getting numbers for August, and decreasing mostly expected in September. So we will see whether this effect will be in the August numbers or not. But anyway, the CPI numbers probably will make the common week for the trading in the gold market. Speaking on the technical picture, overall context remains bearish. Here we could suggest just a few moments that maybe lower or significantly lower CPI numbers could trigger the deeper upper direction, and we said potentially we could get big weekly butterfly pattern if retracement will be somewhere to the 1770, 1775 area, to the major 618 resistance. But this could happen only if we will get some fundamental background, and CPI it might be one among the others. That could trigger the upper direction. At this moment, currently, overall picture looks bearish because market shows tight consolidation in shape of the flag right above the lows and right above the COP target. The target of the weekly grabber, which stands below these lows, is also not completed yet. This combination usually has the bearish sentiment, suggests that the market is preparing for a downside breakout. Grabber that has been formed 2 days ago here is not cancelled, because market was not able to close above it. This spike up is not cancelling the existence of the grabber that's just taken out of these lows. So based on the current situation, whatever direction you would like to trade, from the technical point of view, it will depend on the direction of the breakout of the flag. So if you would like to buy, try to buy as close to the lows as possible. This is first one. If you would like to sell, try to sell as close to the higher border as possible. That's very simple logic. Since market currently stands too far from the lower border and in general keeps the bearish context for the bulls, the only option that exists, they could try to make the bet on a possible breakout of the flag to the upside using stop buy order. So you could place stop buy somewhere above this area, and it will be triggered only when the market will reach this level. Otherwise, your order will be unfilled, so just will not be executed. because taking the long position right now seems not very good decision, just because it's too far from the lows where you could hide the stop, and we do not have any clear bullish patterns on the lower time frame. That's why we're starting the week with a bearish scenario, since we have bearish signs, bearish patterns, and we will try to play the classic approach to trading of the flag pattern. So let's take a look what we have on the intraday charts. Here on Friday we have the pullback that we described and discussed in our video. We suggested that might be some pullback will happen out from the OP, and it has started. Here you can see relatively strong support. So we have the OP or resistance, we have the OP and Fib level. It means that is, well, in an area that theoretically suitable for hiding the stop. So you theoretically could may place the stop somewhere above this area, and using this recent drop for thinking about the position taken on some minor pullback, because it is not reasonable to use currently weekly patterns just because stop has to be placed too far or market stands too close to the final target. So risk reward will be less than the 1. It means that it's not very attractive combination. So you have to find the areas to high stop somewhere closer, which means that you have to, well, deal with some different patterns that let you to do this. Here I do not see something else except the grabber that we have on the daily, and actually flag consolidation and this resistance. It means that on the hourly chart we could try to watch for something like this. So we have this drop. If market will start forming some ABCD, providing the guarded triple to sell pattern, that might be the pattern that we could try to use. If we will get here some grabber around this area, it's much better. The one thing that we should avoid is taking the position if we will get thrusting action. So if you will have this type of action to the upside, big upward acceleration, just do not take the short position. If it will be gradual ABCD action, that's great. So you could think about considering taking this position right around this resistance with the stops, as I said, above the daily 4-hour time frame resistance right there. So actually this is the only combination that currently, well, relatively obvious that we could try to watch for. And then let's see what will happen and how market reacts on the CPI numbers on Tuesday.